Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
Good morning.
Good morning. Happy Monday.
Happy Veterans Day, Will.
Thank you. Thank you. Happy Veterans Day to everyone tuning in who has served our amazing country. Super appreciate you guys. And yeah, thanks for the appreciation, Michael. Love you.
Buddy.
How was your weekend, Will? I think you probably had one of the more exciting weekends out of the four of us.
Heck yeah. Got to have a good time in Puerto Rico. Shout out to Megan and Clark for an amazing wedding. I definitely felt a part of both families, as multiple people were like, we wish we had you at our wedding. So we had a good time. That was definitely a big takeaway. But I came home early, about a day, because I thought there was going to be a ton of snow in Denver, as we got like 1.5 feet during election night, and then throughout the rest of the week. And then, yeah, basically no snow. It ended up being really nice and hot. So I got to enjoy a beautiful weekend here in Colorado. How about you guys? Anything fun, exciting? Michael, same old, same old?
Same old over here.
Brandy?
We ate our way through Miami. My parents were in town and had a lot of very good meals, but now back to, it's just like, a lot of good food in a short period of time. It was a lot of fun. And the weather, it was supposed to rain all weekend, and it only rained a little bit yesterday. So that was good.
For any listeners that are in Miami, hit up Brandy for her food list, like her restaurant list. It's the most robust thing I've seen, and it's so good. I never doubt any of your recommendations whenever you tell me to go somewhere. I'm like, all right, Brandy, you're the go-to.
It's a lot of pressure, but it's a responsibility I don't carry lightly.
Yeah. I know you have that really high standard there. Jamie Lane, welcome back. How was your weekend? Catch us up.
Yeah, it was great. My 3-year-old nephew had his birthday, so we had a great sort of family gathering there. Happy birthday, Owen. And not that he's probably listening. He's 3.
Big fan of the pod.
Yeah. But getting ready to host 12 of my best friends at my short-term rental up in North Georgia this coming up weekend. So it's going to be a real test for the property to see how it holds up.
Fraternity brothers?
No, I wasn't in a fraternity. These are all just good friends in the Atlanta area.
Okay. So it's not going to go absolutely crazy. Maybe. We'll see.
And most of them were friends in college at Georgia. So
keep it outside. Whatever you're going to do, just keep it outside.
Yeah.
That's hilarious. That's awesome. Nice. Well, we have a long agenda and list of topics to get to today, as our group chat was firing off last week. Jamie Lane, you sent a ton of stuff as quarterly earnings were going on. And so we have a few topics, but for the listeners, we probably won't cover them all in the 30-minute time period. So if you have other topics that we didn't cover on this one, stay tuned. We'll probably cover them in the following weeks as they all kind of tie together. But Jamie, how about you start us off with, you had a really good post on LinkedIn. So how about you start us off with Airbnb's co-host initiative, with their earning calls and kind of what's happening with the platform as they're, go ahead, Michael.
But before we jump in, a quick congrats to Airbnb on hosting their 2 billionth guests, Tim and Teresa, in Sandy, Utah. That is a monster number. So kudos to the team over there that's worked 2 billion times on all sorts of different types of transactions and headaches, but that's a big number. So kudos to the team.
And to all the hosts actually hosted them. There you go.
Yeah.
And guests who traveled.
Yeah.
Yep.
There you go.
Big accomplishment. All right, Jamie. So let's jump in.
Yeah. So Airbnb launched their co-hosting initiative publicly during their winter release a few weeks ago. But this is sort of their earnings call, sort of digging into their financial performance. Typically, expectations are high. Results typically, or at least the past few quarters, haven't met them, and we see the stock drop. We saw that last quarter where it dropped 16%. And this time, we actually saw a bump right after they sort of reported. They actually beat on nights on revenue. And then there was, it sort of after trading sort of ended down. And I think there's some worry around what's going on with expenses and what is their ability to be to drive revenue off of all these new initiatives that they're looking to launch. And we've talked about this on the podcast quite a bit. Like Brian said, like I'm going to launch 1 to 3 new business lines that are going to generate $1 billion plus in revenue annually. So what Wall Street is seeing is, they're sort of anticipating all this expense around all this investment to launch new business lines, but essentially they're not giving them any credit. And Richard Clark sort of pulled and called this out, the one of the analysts that covers Airbnb, that they're not getting credit for essentially any revenue for all this expense that they're generating. So there is the potential that Airbnb sees an upside if any of these business lines sort of play out. But right now there's a lot of risks. But in their core business, and they saw 8% increase in nights booked for the quarter. They saw double digits sort of coming out of the quarter in September, in October, double digit growth. So we are seeing sort of bookings accelerate a bit. We're seeing better performance in the US in the back half of the quarter in September, October, even with the sort of hurricane. So where before Airbnb had called out weakness in the sort of US that had sort of spooked people, now they're calling out some accelerating growth, which I think has people pretty excited heading into the fourth quarter.
And to piggyback on the risk on the new lines of business, they also announced a $1.1 billion stock repurchase. So they're willing to kind of put their money behind it and bet that not all of those are going to work out. They know not all of them are going to work out, but you get 1 or 2 to hit, and that's immensely valuable for the shareholders, and they're purchasing a pretty substantial amount of stock back.
Yeah, I think that and Jamie, I think in your very robust article on LinkedIn kind of has these in the right order, but the monetizing their services and assets is going to be, I think, in my opinion, the most likely the most feasible line item. I think when he talks about $1 billion line items, like experiences is not something that comes to mind. The loyalty program, really interesting down the line, but I don't think they've built that out quite yet. In the short term, the services and assets and that kind of thing seems to be the most likely path forward.
You would think that they would kind of speed trial or ramp up the sponsored listing piece first. I think that's kind of like the lower hanging fruit that they would go for to generate the revenue. And I don't know if it was within this group, within our group chat, or if it was someone else I was listening to or reading from, but is the market really expecting Airbnb? Do we really need them to create multiple lines of $1 billion business? Can't they just focus on the core product, making it a little bit better, adding AI, increasing more things for visibility and actual bookings, rather than just building out the ecosystem right now? I don't know. What do you guys think that could mean?
Grow or die. That is that is the old adage. If you're not,
but why go put a ton of money into all these other $1 billion business items when they could just do something simple to start rather than go create a whole new ecosystem piece?
On their core business, they're kind of tammed out. They're creating supply right now, not actually physically, but the amount of efforts that they're doing to add new supply to the platform. That's a faucet that will run dry and is probably not something Jamie can give us some future forecasts, but probably not something they can bank on going to 18 million units in 10 years. So you really have to look at, to their point, to their credit, what services can we add to squeeze or juice our existing profits on where we're at? But also, you mentioned our experience is really a $1 billion thing. I mean, I think Vitor's won over $1 billion valuation. So yes, they really are. That is a big line item. So I do think they have to look at or tell a story, at least to the street, that they're looking at and exploring additional revenues. But at the end of the day, if they keep crushing what they're doing and incrementally growing, no one's going to be upset as long as they're not going the wrong direction.
Yeah. And a big piece of their valuation is that the expectation that they're going to continue to see double-digit revenue growth. And if they just have their core business of short-term rentals, like that's going to move into the sort of single-digit revenue growth that you see with the big, large OTAs like Expedia, like Booking.com. And with that is just going to come a lower multiple, and you're going to see the value of the company start to decrease, which and their shareholders don't want. So their future value really is tied to future business lines, because what we're seeing on supply growth, I actually love it. And I've got a chart. So one thing I know is like really interesting is they stopped disclosing supply growth, like how much listing growth they have, though at our DNA, we know it was about 14%, which is significantly below what they were seeing last year. They called out that they are focused on improving the quality and that they removed over 300,000 listings. So we'll show this chart of average rating for Airbnb listings. So essentially what you saw in Q2 was the average rating for a non-superhost property on Airbnb increased from a 466 to a 469. So that may not seem like much, but when you're taking that average over 8 million properties, like that is significant. And you hadn't really seen it change at all over the past like 4 or 5 years. So they are clearly sort of taking those properties that are underperforming and removing them out of their system and really focusing on how can they make sure the people that are trying Airbnb have really positive experiences, or at least like get rid of the properties where everyone's having negative experiences and really hurting the brand.
Yeah, and so they have this program now. If you're, I don't know how many different levels it goes down, but if you're like an enterprise client or enterprise host, you have like access to see like, oh, if you have a listing that's at risk of it's being watched or it's at risk of suspension or whatever, and they're not able to tell you the mechanics of it. And so you're like, okay, the reviews for the last 2 weeks are the things that counted and are weighted, and you're great. But then we have like this one listing where there's a comment from a review in like June that's still making it like on the watch list. And it's like, okay, so what is the actual math? Is it like the last 12 months? So again, like I could go on about this where I think
the algorithm.
Well, it's like, I think it's great that they're focusing on improving quality. That's obviously a better experience overall for everyone. But when you're on the side that's dealing with like, okay, how exactly do I like manage this new system? They haven't been able to kind of provide a clear, like transparent look into that evaluation.
And then one last comment on, and I know what Michael always sort of focuses on is like, what do we see for his friends? Like, what do we see for the operators out there in terms of how they're performing, and what sort of broad trends can we see from Airbnb? And sort of the call out one is ADR growth. And so they called out North America, ADRs up 3%. Most of that from mix shift, though, from most of the demand going towards higher sort of quality properties, more bedrooms, sort of higher ADRs. So unit over unit and same unit an increase up about 1%, but massive growth in ADRs in Europe, sort of aligning with the data that we've been showing. So weak, but still positive ADR growth. And then if you look at the sort of high level metrics, nights up 8%, supply up 14%. We're still seeing supply globally grow faster than demand. So that globally average listing is still seeing fewer bookings than it was in the year prior. And that's something to continue to keep an eye on. I'd say though, we're seeing the opposite thing with Vrbo and Booking.com, where we're seeing a bit stronger growth in nights booked than supply. So maybe just another sort of thing to call out of some of the faster growth is now happening on some of the other platforms.
So higher ADR, higher supply, but still compression on RevPAR because supply outpaced demand. Is that accurate?
Yep. And it's a segue into what we're seeing and what we'll talk about with Vacasa, and maybe an extreme example, but they're clearly seeing pressure on the operation side.
Isn't there always pressure on the operation side?
Brandy,
When
she's
is there
living
not?
it every day. So good. Well, this actually might be a perfect segue for us to get into Expedia and Vrbo's growth. As we saw, Vrbo added 1 million new listings within the quarter. And so, Jamie, I know you went into this pretty extensively in our group chat. You sent all the good stuff to us. But Brandy, I actually kind of want to pivot to you. So, reading through the actual earnings call and going through all the interesting changes that they're doing with adding urban listings and other stuff to expand their market share. What were your thoughts?
Well, I mean, I think it makes sense. Part of our conversation before is is this the type of product that Vrbo wants and stuff like that? I'm of the opinion that they just want as many listings as possible, as much revenue as possible. And urban markets have been a huge opportunity for them for a long time. I would say that as an operator, when you're looking at your distribution strategy, they still don't have the ability to have the book by type or parent child, whatever you want to call it, that listing format where you have one parent listing that feeds however many sub listings. And so I think until they can figure out that distribution from whatever PMS you're using directly to Vrbo, it'll just be difficult because, for example, if you go and search one area, you're going to have all 60 apartments in that building will be a listing. So I think from a distribution perspective, if they can tighten that up and maybe they had this big tech push, hopefully some of that is in there, then I think it'll be incredibly easy for them to grow that urban supply. And I welcome any Vrbo guest that wants to come. We'd love to have them.
Yeah, and I think the street responded appropriately to the news of 1 million new urban listings as well, because Expedia was up 14% last week compared to Booking up 5% and Airbnb pretty much flat. So it good news for Team Expedia and the story they're able to paint, the picture they're able to paint, story they can tell.
Yeah, I think that you've been looking there hasn't been a big win necessarily for them yet. They've been pushing a lot of marketing material and this new rebrand, but this is actually here is some concrete data that shows that we are moving forward.
Yeah, they stopped spending marketing dollars obviously during their tech migration, so that kind of didn't help them that much, but hopefully, or not hopefully, it's slowly starting to come back up. But Jamie, I know you had a comment that you wanted to make, so
yeah, and I saw two big positives. One on the 1 million new listings, that is, and we've all been talking about waiting for the Vrbo supply to really start showing up on Expedia and sort of the cross sell, the sort of real benefits of Vrbo being part of Expedia start to happen. But on the flip side, with this tech migration, we're finally able to see the opposite too, of listings that have been on Expedia forever now start showing up on Vrbo, where Vrbo's got the eyeballs, they have people looking, and clearly they can see where people are searching and they don't have the supply. And then say all right, we have people searching in these urban areas. We have this apartment hotels type supply. Why don't we move it over and hopefully see an increase in bookings and conversion and from this traffic that's already there that we've already paid for either through performance marketing or just organic earned views. So that's great. And then the other, and this is their first full quarter of positive growth for Vrbo since they started the tech migration. So every single quarter and for the past year has been negative for Vrbo, and some quarters double digit negative declines. So now it's still low single digit positive growth, but it is positive. And I think we're probably past the sort of real weakness for Vrbo, and it's going to be, I think, pretty positive signs going forward, as now they're going to start to be able to see all those benefits from sort of doing that migration.
Well, I guess a question for the group. Do you guys, Michael, you said this, really big win for Expedia compared to the other OTAs, when it comes to increase, 13%, not too bad. It's a big win for the whole group. But do you think this is going to overall, like, how does this kind of overall performance reflect on the broader travel industry, as like obviously we're getting into holidays? I know the New Year's coming. A lot of people, does that have any implication, or is this just a big win for Expedia as they did all these changes behind the scenes these last couple quarters?
I think they took a explicit route to focus on the future, and sometimes that means taking a step or two back. And technical debt, for anybody who's been in a tech company, is brutal, and it can take a long time to sort through. So you have to do it sometime. It's easier to do it when you're in control versus, a year or two ago, we saw massive airline disruptions because of technical debt from legacy systems. And so they took it head on, proactive, and Wall Street's rewarding them now. And it was probably a painful few quarters trying to explain it off, but the numbers are starting to come in, and it looks great.
For sure. Awesome. Well, next topic of the day is going to be rough. This one's going to be a bloodbath to get into, but Vacasa's business is not looking so hot. So Jamie Lane, bring us a hot tea. I want to kick it off with you. I know you got some passion behind this one, so let's go.
No, I mean, and the business still continues to underperform. And so they saw a 10% decline in listings on a year-over-year basis. So they went from 42,000 to 38,000 in a time when overall industry supply was up about 5% year-over-year and in the US. So in a time when the industry is growing supply, they're losing supply. And a big piece of that is sort of churn. And churn, in a lot of ways, because earnings have been decreasing both last year and this year on a per property basis. So they saw overall nights booked down 21%. They saw ADRs up 2%, and gross booking value down 19%, revenue down 17%. So if listings decline 10%, revenue is declining 7%. That's maybe a RevPAR down like 7%-ish on a per property basis. So overall business is underperforming, and that's clearly below what we're showing for the industry in the US and even for larger property managers around the country. So one of the comments that really stuck with me was Rob saying that, and he continues to believe that Vacasa's listings are generating more gross bookings per home than the industry generally. And we can believe in Santa, but that doesn't make it real, right? So and they've seen 2 consecutive years of declining RevPARs. The industry is not performing that bad. So if you look at the average Airbnb host not generating as much revenue, but when you actually look at the comps, sort of large professional managers, even managers with 6+ listings, like they're clearly starting to underperform industry averages, and that's showing up in the churn figures that they're seeing.
Well, first comment is don't let your kids listen to this episode, because Santa's still real in this household.
We're going to get some angry letters.
But yeah, I mean, I think it's kind of a shame. There were so many good businesses purchased by Vacasa through the years, so many good ones. And in the end, I think all of them kind of won out. And still, if they're interested in the space, might be able to win out again in the future, whatever their non-compete is up, or whatever happens with Vacasa. Like they can't keep on this track forever. So there are a lot of really good markets, and those were built on the backs of incredible businesses. But it's a shame to see, and I feel bad for the salespeople for Vacasa. It's going to be really hard to recruit new properties, new owners with some of the metrics they've put out.
Well, I believe on other episodes we've covered Vacasa many times, and one of the things is like they're their take home fees is not a small percentage. Like they're taking almost 50%. So it's not like there's not any wiggle room. I don't know what their total fee structure is, and I probably should have looked it up before I made the comment, but it's really interesting. It's like, okay, if your owners are turning that fast because of how little they're making from it, and you believe that your rates are truly at the best they can for that market of the actual property, then there needs to be a a come to Jesus moment with what your fees are, how you're actually billing for certain things, or what's kind of hidden inside the contract, and how you guys can actually make owners more money and profitably run your business. Especially Brandy, I know we talked about this the last time, was with their focus on local operations, right? So centralizing the finances and some other stuff, but then letting the local operator actually take control of their business. So we were hoping that was going to be a little bit more of a positive impact, which I don't know. Brandon, what's your overall kind of like outlook on that?
They said that they're seeing some of the benefits of these decisions that they've been making. So that's good if you make a lot of cuts and you make some like core changes to how you operate. It's good to see those efficiencies, but at this point, this is not like you can only cut so much and you can only restructure your organization so much. Like the revenue has to be there to kind of pull you out of this hole. So it doesn't seem super rosy. I think the most bleak part of this call was that there was like no questions at the end. I was like, ooh, I was reading the transcript and it just like abruptly ends. So that's not the best.
No interest in the market.
One quick disclaimer: we're covering publicly traded companies. We are not financial experts. Anything we say is not taken as advice to trade on any of these businesses.
No.
So,
this is
Michael. Thank you so much for saying that, because I should have thought about that. We could have gotten GMH just gets hit with a fat cease and desist of
this is all publicly available information.
Yeah.
It's a quick
These
little
are all
Google
our
search.
opinions too,
Yes.
layered on top of information that we've found. So
yes.
But as I've said so many times on the show, like when like Sonder or Vacasa does poorly, like that is not a good thing for the industry. And I think that there are a lot of people that kind of take some sort of pleasure or vindication in seeing them struggle on such a public platform. But like some of I think the larger question sometimes is, how does this industry build a brand that can be large enough to be a national brand and still work? Because a lot of people say that it's not possible, and we're not seeing, we're seeing a public version of that. So I think that there's a lot of good lessons to take away from it. But yeah, in terms of specifically Vacasa, it doesn't seem super rosy.
It's not looking like Christmas is coming in for them, Jamie. No Santa this year. Michael's house, yes, but no Santa for Vacasa.
And I'm not trying to be a Grinch.
The Christmas theme is really getting me. I love it.
Yeah, but in all seriousness, it really is hard to do this in a public sphere. I think one of the maybe things we could hope for most in terms of a Christmas miracle is someone to come in and take these companies private and be able to grow them in a way that isn't as public, and that where they can make tests and sort of not have to see it have material impact to their stock price immediately, but give them time to sort of restructure and grow. And you see this with some of the other private companies in terms of going through pains, and that they can sort of reduce supply, focus on profitability, and make those gains going forward. So I'm all the best to them, both Vacasa and Sonder, that they can and sort of turn this around, and that this push of going local and actually works out, and that they can, like Verbo did, and this time last year we were railing on them for seeing double-digit declines in RevPAR, but they were able to push through, make necessary sort of changes needed to the business, sort of get rid of that tech debt. And now they're poised for growth again. And I think the industry is going to benefit a lot from that sort of short-term pain that they had.
Very well said.
I think one of the other like good points you had is that they're not really allowed to to experiment because it's done so on such like a public platform. They're obviously publicly traded. And we're also looking at things in 3-month increments. Like, I think that's one of the things about publicly traded companies that drives me insane anyways. It's like to come up with the changes, implement them, and then see the result of those changes does not happen in a clean quarterly cadence. And there's, and also shedding units, if that's something that you're doing voluntarily because they're not good units, can be a good thing. So I think you're totally right that maybe the Christmas Miracle is going private again and being able to make those like tougher decisions that aren't going to play well, for a public company.
Well,
yeah.
Yes and no to some extent. I mean, we talked at the top of the show about how Airbnb is looking at 7 to 10 different business lines that could be $1 billion for them. So they're experimenting in public. The difference is they're profitable and they have $11 billion in cash. So
yeah, when you're doing well,
when you're profitable, when you're profitable, you're allowed to experiment. When you're not profitable, you got to get profitable. So
which, like,
you shouldn't
ironically,
be experimenting too much if you're not profitable.
That's a good point.
I think for me, that's like kind of the ironic part is like, if you're really suffering, it's like, okay, let's throw all the spaghetti at the wall. No idea is a bad idea. Let's try to save this thing and right the ship. And that's exactly when you're not allowed to do that.
Also, like, maybe for them is just get back to the core basics of business and just focus on, don't look at the sexy, shiny objects. Like, like I think you guys both make great comments, but yeah, don't throw spaghetti on the wall. Just put your head down and freaking dial in your systems, get proper training, upskill your employees, make sure that they're actually supported. Don't like cheap out on these certain things and just go head down and build that. Like, sometimes it just needs to,
tens of thousands of property management companies that are profitable. Like, for you to be the biggest, I know that comes with different headaches and regulations and whatever.
Yeah, for sure. Publicly traded.
If a local guy that loved fishing in Panama City Beach can start managing houses and be profitable, then I think, Wall Street people should be able to figure it out. But if not, maybe the structure is wrong. Maybe they've overhired, they've overthought this whole thing. Just, simplify it. Keep it simple, stupid.
Amen.
I'm not calling anybody stupid, but that's just the saying, guys.
It's the saying. Michael
disclaimer.
Yeah, and Michael's canceled. Just kidding. No, this was a great episode. We actually hit the time of 32 minutes. So congratulations, team. We're getting so dialed in on this. It's so great. Makes my heart happy. But for all the listeners that tuned in live, one quick shout out to Paul Manzi, who is so devastated about Santa not being real. Jamie really ruined his day. So good job, Jamie. But this is a great episode. We're super thankful and excited to do these every Monday. If you are a fan of the show, please like and subscribe. Make sure that you are getting the news directly to your email through our newsletter. Like our YouTube channel, as that's growing significantly. And of course, tune in to our European crew and our hotel crew to hear more fascinating news. Any fun comments before we wrap up the show? Any fun things for you guys this week?
Nothing new.
Gosh, if I hear another same old, my heart is just gonna break. I'm gonna shatter into pieces. Right?
Do you want me to go into the? It's like I could go into the minutia of the day to day, but nothing super extraordinary.
All right. Well, anything fun that you guys personally are excited about, not business wise, or what?
This is later in the month, but I'm going to see Billy Joel, and I'm so excited. I just got the tickets. It's like gotta see him before he dies.
Hey, facts. Brandy, I know you like dance festivals and concerts. If you and Max aren't doing anything for New Year's Eve, which I know is kind of a big thing to pull you away from Miami during that time, but you should come to Decadence with me for the 2-day pass because it's going to be wild. Elenium, Slander, Excision, all these guys are going to be playing. So just FYI. Anyways, shout out to all of our rave heads in the audience. Anyways, great show, guys. So much fun. We'll see you guys again next week. And for all the listeners, thank you again. Have a great Monday.